I would expect the silver price to crash one more time until the Fed starts printing again, and then everything just reflates to where it is now plus and then some. But do you see that happening? If so, like how extreme do you think it's going to be? Because I think it's going to be pretty extreme.
Oh, I was just going to say, when I did my research in the early days, I was looking at what happened in the 1920s. Oh,
well, I'll just butt in there and say that every time there's been a crash, it's come from a high point. But the trouble is, you can have high point after high point after high point after high point, or record price with no crash. And then eventually it does come, and everyone said, oh, it's obvious it's going to come. The price was an all-time record. But the chances that each all-time record is probably less than 1 in 10. That's going to be the top, and you're going to now suddenly have a fall.
Market history suggests that precious metals often undergo a violent deflationary liquidation just before the Federal Reserve initiates a massive liquidity injection. Analysts predict one final crash in silver prices, driven by a liquidity crunch where investors are forced to sell assets to cover dollar-denominated debts. This washout event is expected to be extreme, clearing the board before the central bank pivots back to aggressive money printing, which would then propel prices significantly higher than current levels. Timing this correction is notoriously difficult because crashes invariably occur from all-time highs, yet not every peak signals a collapse. Marioinnecco, host of Innecco 64, and Clive Thompson, a retired wealth manager, debate this probability alongside Rafi Farber and phillow. Thompson points out a statistical reality. While every crash starts from a record price, most record prices are simply stepping stones to higher levels. He argues that betting on a top at every new peak has a low probability of success, less than 1 in 10, meaning that while a correction is plausible, the trend often extends far longer than bears anticipate before the inevitable reversal occurs. Now, we present the clips from Marioinnecco, Clive Thompson, Rafi Farber, and phillow's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I do expect silver to crash one more time. All these companies or these actors, whoever they are, that are buying silver right now at $103.30, right? That was the last one. And they're buying it for whatever reason. They're stockpiling because they think the dollar is collapsing, or they can't get their silver, or they need their silver for whatever, solar panel, whatever they're building, I don't know. But these companies, I'm sure they carry a debt load. And whenever there is a deflation and there's going to be a rush for dollars, not because people want dollars, but because they have to service their debts, and that's still ahead of us. So all these actors that are buying silver right now, they're going to have to sell their silver for their dollars to service their own debts at some point soon. At that point, I would expect the silver price to crash one more time until the Fed starts printing again, and then everything just reflates to where it is now plus and then some. But do you see that happening? And if so, like how extreme do you think it's going to be? Because I think it's going to be pretty extreme.
I was just going to say, when I did my research in the early days, I was looking at what happened in the 1920s. Oh,
well, I'll just butt in there and say that every time there's been a crash, it's come from a high point. So, but the trouble is, you can have high point after high point after high point after high point, or record price with no crash. And then eventually it does come, and everyone said, oh, it's obvious it's going to come. The price was an all-time record. But the chances that each all-time record is probably less than 1 in 10, that's going to be the top, and you're going to now suddenly have a fall. So will 103 that we saw last night be the top or not? The odds are stacked against it, but it could be.
Yeah, I think, Rafi, that, let's say we go to 150 and then there's a crisis, liquidity crisis, and we drop to 100. I think it would be very short-lived because the system is in such bad shape and in trouble that the Fed and the Treasury, they would throw everything at it. So we might see the price drop from 150 to 100, but you won't be able to get any silver at 100, and then it's going to go right back up to like 200. So I think it's possible.
What happened in the 1920s, 1929 crash, was that silver crashed to under $1. So a silver dollar was worth more as a dollar than the silver value that it had itself. So, because people were in such demand for dollars, it was a deflationary crash. So there's this rush for dollars, including silver dollars, not just the paper Federal Reserve notes. So that could absolutely, I don't think it's going to go under $1, but I could absolutely see a very severe silver crash during the deflate. But it should go. It's because it's a real good, and because it's even partially monetized good. It should still go down slower than like Bitcoin or stocks. So you could see silver go down 50, 60%, and all the stocks and bonds go down 90, 95%.
Yeah. The other thing, Rafi, I think is if we do have a deflationary event, we'll see a lot of bankruptcies, and holding physical gold and silver, I think it's a good hedge. So I wouldn't worry about the fiat price personally. Real move in gold started after August 22nd, 2025 speech at Powell's speech at Jackson Hole. It seems banks went long after the speech, or something broke. Actually, I don't agree with that. I'm going to show you why. I think it was in here. Let me bring the chart. I think it was here, and this was in 2024 when we broke this line. But I can see what you mean. I think it was here that you're talking about. But it had already started breaking out. So I kind of half agree with you. Oh, yeah, and I wanted to show you guys this. This looks like usually when the market goes up, you get a falling wedge, right? But here we got a rising wedge, which is very bullish, and we've broken out of it. And you usually measure the difference from here to here to get the objective. And in percentage terms, it's 469% that we move the distance here. And I calculated from 2,700, which is pretty much the level here. And I'll tell you, the objective of this breakout would be $15,400, and some people might think that's not enough, but it could be just the first move, and then we could have a correction back down to 10 and then back up to 30. I don't know.
15,000 puts us at maybe 35-40% backing of the Fed's liabilities,
which is historically what central banks used under gold standards, right?
Yeah, about there.
Well, that's only if they revalue to it. The Federal Reserve is still insisting they have it at 42, so they would have to revalue it.
Yeah, but like you guys have said, if they revalue it to 5,000,
yeah, it's over.
Things will go.
They're not going to. They won't do it.
Yeah,
I think they've got no choice.
Yeah,
they have to do something about the debt by revaluing gold to a different level and carrying out a few financial tricks. They can generate several $1 trillion out of thin air, which will reduce the debt, at least temporarily, until they spend it again. And it's kind of like kicking the can down the road. But at least it will keep things in check for a couple of years.
Well, we got.
I think that'll set off the end game if they do it.
We've got a.
Well, we're in the end game anyway. So what difference does it make?
Market analysis suggests a final deflationary washout in silver may be imminent, as leveraged entities are forced to liquidate hard assets to service dollar-denominated debts amid a liquidity crunch. Unlike the 1929 crash, when silver fell below $1, this potential dip is expected to be short-lived and far less severe than the broader equity market. While stocks could plummet by 90% in a depression scenario, silver is projected to retrace only 50% before rebounding violently due to acute physical scarcity. Simultaneously, technical indicators for gold reveal a bullish, rising wedge breakout, projecting a long-term target of $15,400. This specific valuation is significant as it represents the price point required to back approximately 40% of current Federal Reserve liabilities, effectively resetting the monetary system to historical solvency standards through market forces. The endgame scenario increasingly points to a forced revaluation of gold reserves as the only mathematical solution to the sovereign debt crisis. By repricing gold to levels like $5,000 or even $15,000, central banks can generate trillions in nominal equity to clean up balance sheets without immediate austerity. While some dismiss this accounting maneuver as a temporary financial trick, it represents the definitive signal that the debt-based fiat system has reached its terminal phase and a new monetary baseline is being established. Let's get back to the interview.
When it hits, like, if it goes 20-1, I'm going to swap for gold. I'm going to go 15-1, I'm definitely going to swap for gold. But I don't have any specific plans to swap for gold. I have plans to, when it's 15 or 20-1, I'm going to buy whatever's on sale for silver.
How are you going to swap for? I mean, if the banks all go down and the stores are being looted, you're just going to fill your wheelbarrow full of silver and like whistle on down to the gold dealer.
No, you probably exchange it with privately, with someone that has a
If
car.
someone has the gold, yeah, even that. I mean, I would
Yeah.
going to go to someone's house with a wheelbarrow full of silver. I don't
Yeah.
know. How are we supposed to be
I
doing
grew up
this?
in Brazil and, they had a few currency collapses in the 80s and nothing, with the exception of one time where the shelves in the supermarket were bare, people used dollars. So everything ran really smoothly. And then you just reorganize the new currency. So I'm not too sure it's going to be that like Mad Max like, but we'll have to see. There's another super chat from Carlos. Thank you, Carlos. Trump tweet 14th of January, and I quote, effective February 1st, no more payments will be made by the federal government to states for their corrupt criminal protection centers known as sanctuary cities. 38 United States in 7 days. Well, I mean, the ironic thing is that the United States could break up domestically and collapse domestically before Europe does, or even Iran, with what's going on. I don't know. I mean, I'm not in the States, but I've seen what's going on in Minnesota. It's not good. What do you think, Phil? Because you're there and you probably know better than us three here, the other three who are not.
What's the question? I'm sorry.
Well, he's just making a statement that Trump tweeted that there will be no more federal payments for these states. Yeah,
Oh, I don't know.
sanctuary.
I mean,
Yeah, yeah.
it's
And is it just the states that are corrupt? What about
yeah.
the federal government? I mean, what about Jared Kushner, who's a private citizen and he's running this project?
I'm checked out of the dollar. Like I'm just like,
Yeah,
I mean, I know what's going to happen. I know something's going to crash. They're going to print
yeah.
$10 trillion, and that's going to be the end of it. So
And
I
I'm
don't
not having a go at
fight
the
over
US.
what's happening right now is irrelevant to me.
I'm not having a go at the US for being corrupt. I think there's a lot of corruption here in the
Yeah.
UK and everywhere. Rafi, you got an opinion on that?
Is the United States falling apart right now? Minnesota definitely is.
Yeah.
Yeah, that's a good
But
harbinger of what's coming, I think, fortunately.
yeah, but I mean, Minnesota's always been different from the rest of the country since I remember it was like the only state that Walter Mondale won in
Oh
1984.
yeah, I remember that too. That was against Reagan, wasn't it?
I think so. Yeah, 1984. Yeah,
The
Walter Mondale. I got
Mary Tyler Moore show, wasn't it? Was from there.
could be.
Don't you remember? I guess you're too young for that.
No, I remember it was on Nick at Night.
Yeah, Nick at Night. Yes, I remember the show. I don't remember where it was based. Yeah.
Clive, any opinion on the state of the United States?
Well, clearly there's something going on with the dollar. We saw the dollar fall fairly heavily in the last couple of days. It's down to, on the dollar index, it's down to 97.5, I think. And it's only a few days ago it was knocking on 99.5. So that's indicative of which way the world is thinking. They're saying we feel uncomfortable about debasement. We feel uncomfortable about the fact that interest rates are going low. I feel uncomfortable about what's going on with the rioting in the United States. We feel uncomfortable about Mr. Trump's comments about armadas heading to Iran. We feel uncomfortable about Greenland. And I think there's just a general ill-ease about America and the direction of travel. And people are saying, do you know what? It's not the time to be buying dollars.
About the dollar, Clive, the dollar index seems to be, holding just above like a trend line that's been running since 2008 when it hit a low of 70.69. It's at 97.46. So yeah, it looks like we could have another leg down. But, back when it hit 70, gold was at $1,000. And now, we're at 100 almost in the dollar index, and gold is at 5,000 almost. So longer term, you got to be out of all the fiat currencies.
Is
Yeah,
that
that's
for Clive or is that for the general audience or for the general group? I
For
mean,
everyone, yeah. And it's just that Clive was talking about the dollar before, but yeah, anyone can answer if they want that.
I mean, I think the dollar is probably going to head lower this year. I don't see foreign nations deciding to massively increase the dollar exposure in their central bank holdings, but I see the amount of dollars coming into existence is going to increase by 2 trillion this year. Basically, government debt getting bigger by that amount, which means the government gets poorer. Someone gets that 2 trillion. I don't think it's going to be foreigners who are going to be buying it. So basically, more dollars means lower dollar.
if
Phil,
foreigners don't take on dollars, what exactly are they supposed to do with their own currencies, though? Because this is where Peter
they're buying gold.
Yeah, but then they're gonna have to make it redeemable. There's no, you can't just have a pile of
I think
gold.
they will.
I can't
Well,
say
not
oil.
redeemable, but they're making it like the Bretton Woods. They will settle their balances at the end of the fiscal year. You know, if they have a current account deficit or a surplus,
But not
it'll be
redeemable for
settled.
the people.
No, not for the people, unfortunately. I don't see that happening.
I don't know if that's gonna work this time.
Yeah, I don't think that's going to do it.
The practical reality of a currency collapse is often less chaotic than Mad Max fantasies. Historical precedents, like Brazil's, show that commerce adapts to alternative currencies rather than reverting to primitive barter. However, the current fracturing of the U.S. domestic landscape, highlighted by political moves to defund sanctuary cities, coincides with a deepening crisis for the dollar itself. With the greenbacks index slipping and the U.S. government preparing to unleash another $2 trillion in debt, foreign nations are actively ceasing their purchase of U.S. treasuries. Instead, a geopolitical pivot is underway as global powers accumulate gold to settle trade imbalances, effectively reinstating a shadow gold standard to bypass a debased dollar. The emerging financial order suggests a bifurcated reality, a return to Bretton Woods mechanics for sovereigns, but strictly fiat for citizens, while central banks prepare to settle international accounts in physical bullion to protect their national wealth. They show no intention of restoring public redeemability. This leaves the average individual trapped in depreciating paper currency, making personal ownership of physical metals the only way to participate in the actual settlement layer of the new economy. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.